Hey
How you
Johnny,
doing,
hi
man?
everybody.
Yeah. Hi,
Yeah,
everybody. Welcome to episode 36, Hobby Research Weekly Market Chat. I'm Johnny, I'm your host today. We also have Benz here.
yeah.
Yeah. And let's lay down the topics that we're going to talk about today. As usual, we're going to go through Bitcoin's price, Ethereum's price, probably also look at the XY and how stocks are doing, SPX. And we tap into, the Jerome Powell speech yesterday. I actually listened to that, but let's talk about it later and let's discuss how market reacted. And later on, we're gonna um, share our thoughts on next week's market data, CPI coming out, how market's gonna react later on next week, and I'll also spend some time talking about the latest Huobi research bi-weekly Bitcoin market report. Yeah, that one.
Yep.
And that one's pretty good for assessing the current market trend. And let me get to that later on. So first of all, let's look at Bitcoin's price right now. So I'm going to do some charting here. Okay, we're now trading at 23K 100. Now just dipped under the 50 SMA. That one is actually 4 hours. So if we look at one day,
Johnny, your
a lot of
screen is
people
not
are,
shared.
I'm sorry. Let
Yep.
me just share my screen. Wait a minute. Share screen. Yeah, here we go. See now? Good.
Now, I think you switched away. The
Oh,
screen is no longer there. Yeah.
sharing has ended. Wait a minute. Let me try that once again. How about this?
Yeah,
Good.
this is good. Yeah.
Yeah, very
All
good.
good. Yeah.
Okay. So let's look at the chart right now. I'm full screen mode. Okay.
Okay.
Yeah. 4 hour chart, we are now trading at 23K 100. We just dipped under the resistance of 50 SMA under the 4 hour chart. And a lot of people right now are talking about the golden cross here. You see the golden cross here?
Mm-hmm.
This one. This one. Yeah. This is pretty important to a lot of traders because um, you know, we take the 50 and 200 daily SMA, the golden cross, as a bullish and bearish momentum indicator. So if we look back in 2020, it happened once when the bullish crossover happened here, and then the market went up a lot. But sometimes, a market fixed it, and there was a fake out here, so that doesn't count. But you know, generally, a crossover generally indicates a bullish momentum. Some people are saying that it's a lag indicator. Some people say it's a very good piece of reference. But in my opinion, we should look at the 1 week instead because this is huge. The
Yeah.
weekly golden cross, and this is, in my opinion, I think there'll be a little bit, not a little bit, so much selling pressure coming out because traders deem it as a resistance level. People are talking about it on Twitter, and we should also pay attention to it because I think we haven't Bitcoin has not spent a single time the price goes under the 200 moving average for a weekly 200 weekly moving average. So this is the first time the price dipped under the 200 weeks moving average, and now we are retesting it. The first time we retest the 200 weeks moving average, and that will be an important event to watch out. Whether if we can break out from the 200 moving average, that will be a very bullish case, and maybe we can see some God candles that we haven't seen very long before. For example, the
Mm-hmm.
God candle like this, that would be very amazing and excellent. Pretty money. But if we rejected this zone, probably we're gonna retest lower. And right now, I just um, indicated three zones, which are some very simple support and resistance zone. And in my opinion, we're gonna retest the support zone down there 22K 500, something around that. That's very reasonable. Let's see how price react that way, because if we bounce up quickly, and that would be a bullish case. But if we consolidate down there with a weak momentum and maybe more selling pressure appear, and then that would be a bearish case, and maybe we're gonna visit the 21K zone, and that's a bearish case. Okay, so let's watch DXY because what's up, Benz? Go ahead, man.
I think a lot of CTA traders, CTA traders, they usually use, most CTA traders, they use moving averages, can be SMA, can be EMA, to actually give them signals, because CTA can be one of the, I think, simplest trading signals out there. Like, sometimes it works, sometimes it doesn't work. But according to history, a lot of hedge funds, you look at Medallion, you look at those traditional hedge funds, most of them they started from CTA strategies. So how CTA is good is because it works very well for commodities. So I wouldn't say Bitcoin is a commodity, but it sort of acts like one. So hence I think a lot of CTA traders would tend to use this strategy on Bitcoin. So personally, I feel the chart earlier where you drew the trade resistance, right? I think most CTA traders will actually wait for the price to go down to the 200-day moving average, which is in line with the lower bound of resistance, which I think is quite fair, because actually it has crossed and it will retest it. So to actually confirm the uptrend, right? So I think that in short term there might be a small correction, unless like macro conditions prove otherwise,
If we're gonna retrace back to 200 days moving average, there will be somewhere around wait a minute, we get to the rectangle zone. I think that will be here, right? Somewhere here. If we retrace later on, maybe next week. Okay, I think that's also a big pullback, like 10% pullback. You just spoke of the macro liquidity condition. So let's have a view on how risk sentiment going on. Okay, so if you look at the XY chart, it's I think it just bounced from support area here. What do you think about it, Benz?
I think last week or 2 weeks ago. I think last week. So FOMC decision was 25 basis point, right? And on the same day, depends on different time zone. The ECB and the Bank of England, they had their interest rate decision as well. So both Europe and UK's bank had the decision of 50 basis point hike. So in terms of like interest rate parity and stuff like that, the DXY will definitely weaken, because expectation of different interest rate, UK and BOE offering high interest rate, hence they draw the demand from US dollar over to their own currency, right? So that was on Wednesday. That was narrative, and everything was priced in like this causes US dollar to weaken. But the thing is, on Friday, if you see the rebound from the resistance on Friday, it was the important job report was the non-farm payroll, as well as the UK unemployment, right? So it exceeded expectation, hence it make the case for a strong US dollar rebound. So however, what is surprising right now is the Bitcoin, it didn't retrace so much, even though DXY rebounded, right? So,
or maybe the market has not reacted yet.
Maybe.
You just spoke about the unexpected non-farm payroll, showing the strength of the labor market, which somehow DXY bounced back because of that. And actually, I listened to Jerome Powell's speech yesterday, and he spoke about if the labor market is still strong and inflation is not coming down, probably they're going to raise the terminal rate for the rate hikes, and the market just stumped. And let me just get to the maybe we can search the headline: power terminal strong labor market. Yeah.
I think yesterday's power speech was neither dovish nor hawkish, right?
Yeah. At the
So,
very beginning, he has been
mm,
very, very dovish. Yeah. But
yeah,
somehow later on, at the end of the section, the interviewer asked Jerome Powell about a strong labor market and what he thinks about, and then further rate hikes needed and markets take heed. That's what he said. So at the end, I think he delivered a message that uh, there's a possibility that they're gonna need further rate hikes, and we cannot just assume that 525 is on the table, and maybe we can go beyond that. And that's what he
yeah.
wants to tell us. Yeah. So
I think it's more like trying to tell the market not to not be too optimistic about the
yeah,
current environment, right?
yeah,
Because
not to do some crazy pump, man.
yeah, because I think I mean S&P and the Nasdaq has rebounded like maybe 15 to 20% since
Yeah,
the lowest, right?
yeah,
So
yeah,
I think there's a lot of like very the optimism built priced into it that the
yeah.
Fed might pivot like earlier, right?
Uh,
So however they still think I think the Fed is still like maintaining the their stand that high interest rates is still going to maintain for a longer period of time. I think this is what the Fed is going to tell,
yeah,
right?
yeah. And also, I want to share funny stuff. Just at 2 o'clock, in Eastern time, in Singapore time. So for me, in Hong Kong time, Jim Cramer tweeted. Okay, I'm gonna get to Twitter. So wait a minute. Jim Cramer tweeted, "We are absolutely in a bull market," and just look at this tweet, man. I reiterate it is bull market, and then SPX just plummeted, right? It's very funny. Okay, so back to what I want to say. Actually, Jerome Powell at this point, Jerome Powell said, this is at the end of the interview, and he said, further rate hikes are needed, and then the market just plummeted. And then after Jerome Powell's speech, after the interview, and then the market recovered somehow. So that's what happened last night. Yeah,
Mm-hmm.
yeah. So, and talking about macro liquidity condition, I would like to just have a look, just update the reverse repo, because it has been a very good instrument for assessing risk sentiment in the market. So you can think about, if reverse repo goes up, which means that money wants to invest in low risk instruments, like the reverse repo offered by Fed is actually offering a zero risk investment security. And this actually is a very good piece of reference for assessing the current market risk sentiment. So if it goes up, it means that people don't want to invest in risky assets. If it goes down, Bitcoin pumps, and other risky assets also pump. So right now, I think we are not seeing a rebound or something. It's
Mm-hmm.
relatively flat. Yeah. And
Yeah.
also Treasury General Account. That one is also very important to watch. Wait a minute. Yeah. So the Treasury General Account is actually a checking account of the U.S. government, and we just saw a pump here. So wait a minute, if I can share with you some chart here, but I think I'm going to do later because I need to open the Visual Studio Code. So, hey, Benz, would you like to just talk about maybe the CPI data next week and also the economic data first, and then
Sure.
I'll get back to this later. Yeah, let me work
Sure,
on
no
a little
problem.
bit. Yeah,
Okay, so just let me recap on some last week's data, right? we mentioned earlier just now. Okay, so last week's data, I think most data came in pretty good. So on Wednesday, there's this ISM manufacturing PMI. It came in better than expected and previous. Jobs vacancies openings also came in better than expected. So we are looking at the economy is doing well, PMI is well, vacancies in the US labor market is good. And then the ADP non-farm payroll, which is like more of like a leading indicate data uh, that is released on Wednesday prior to every first Friday non-farm payroll. So it actually meets expectation. Expectation was 178K. It came in at 106K. So a lot of market participants, like I mentioned earlier, were expecting US dollar to weaken. So and then the FOMC meeting came in, which is a 25 basis point hike versus the BOE and ECB 50 basis point hike. So it builds the narrative and a case for US dollar to weaken. That is for the I would say the whole sentiment on Wednesday and Thursday. And then Friday came in, the non-farm payroll at 517,000 versus expectation of 185,000, which is like a huge or like came huge well above expectation. So and also US unemployment rate fell to 3.4% versus expectation of 3.6 and previous of 3.5. So we can see that as uh, Johnny mentioned that the Jerome Powell speech last night mentioned about strong labor market. This is the reason why he mentioned because normal payroll was good, unemployment is good. Because most economists are expecting that in a very high interest rate environment, business won't be doing well. There'll be a lot of retrenchment. Hence, um, usually inflation will tend to go down. And also, but what is happening right now is something I think is kind of special for our time because labor market is good, interest rates are very high. So with that, inflation is there to last because there's more people employed, there's more expendable income, people tend to spend more, hence push up the demand for limited goods, hence it causes inflation. Hence, he mentioned about inflation is there to stay, hence they keep maintaining the stance of the Fed will maintain high interest rate over a longer period of time. So this week there's no many economic events. Mostly are from the Fed officials. Like today, there's four Fed speeches, including last night, this morning's Powell speech. There's two more. There's one more tomorrow. From Fed's Waller, and Waller, and also Saturday there's another Waller speech as well. So usually during this period of time, we always think that no good news, no news is a good news. So it's good for trading, and there's not many events that is impacting the market. And these features might have some impact, but I think it won't be very drastic, like a huge pump or huge dump during this week. However, there might always be a black swan event, right? So so next week the key economic data will be the CPI data releasing on Tuesday. Expectation is 5.5% versus previous 5.7%. So the economists they are expecting inflation to come down a little. However, because if you look at Friday's jobs report, inflation might be around the area, might be even higher. So hence market is I think it's trying to price in what is gonna happen. Hence we see like maybe the market is moving sideways and so on and so on. So
actually I also want to point out that for the CPI data, we also have to pay attention because they changed the calculation for getting the CPI data since January of 2023, and you can actually search the news and on the just look for the headlines here. Maybe you can go to Indra here, and then it says US CPI calculation methodology will change from January 2023 onwards. And we might not expect, the CPI forecast to be very accurate. So I'm still figuring out what that means, because what I researched and what I looked into, I know that they actually changed the calculation waiting for the CPI data from 2 years waiting to 1 year's waiting. And I still gotta, figure out what that means and what it interprets to the CPI data, whether it will be more flexible for economists to project the data, or I guess it will be more flexible, because changes mean it's not the same before. And let's see on next Tuesday the data coming out, and let's see if somebody's gonna mention the change of CPI calculation methodology leads to the maybe some unexpected CPI data on Tuesday. That would be interesting to watch.
Yeah, sometimes I always I feel that it's a bit suspicious, right?
Yeah, suspicious.
When inflation is already very high and they decide to change the calculation, there might be something wrong. It's like, are they trying to hide certain figures and something like that? They are not trying to be transparent. Yeah. So we will see whether it is still in line with what they want. Maybe it's in line with what the market is versus what they want. So sometimes some data can be manipulated. So yeah. However, the CPI data is still official data, so the market will still move according to that.
Yeah. So the exact wordings here: CPI weights based on a single calendar year of data utilizing consumer expenditure data from 2021. This differs from the prior method. The old method used the weightings of 2 years worth of expenditure data every 2 years. So let's see, man. I don't get a time to look into the CPI handbook of method. That would spend me a lot of time. I don't want to dive into that. But let's see if some dudes on Twitter does the research and he publish it about this change, I'm happy to share with you guys if we find out later on. Yeah.
Yeah. From what I see from this is the CPI data will be more sensitive to changes. So if prices really goes down quickly, it will reflect it better. That's what I see.
Yeah, exactly.
Mm-hmm.
So, any more news from your side, Benz?
Nothing from me for now. Most important is still the Tuesday CPI data, and just now we were talking about some minor corrections. It might be during that period of time, right? Because the 200 moving average is around that area, that region, and the gap is has to be covered. So it can be a key time period.
Yeah. So I just opened the charts. Let's get back, and this is the chart featuring Bitcoin's price and also Nasdaq and the inverted reverse repo level. I also include foreign RLP, so the total RLP for reverse repurchase agreement offered by Federal Reserve, whether to U.S. locals and also to foreign investors, also included. So the red line is the inverted RLP. I took 7 days SMA, smoothing out the noise, and then also took 7 days SMA for Bitcoin, Nasdaq, and also Ethereum. So right now, okay, we are seeing that the reverse repo is coming down a little bit. Yeah, here, coming down a little bit. So usually when reverse repo comes down, we tend to see other risky assets follow suit, okay? The first time here, second time here, and maybe this is the third time, okay? And it has been a really good indicator for evaluating trend strength and maybe doing forecast. Sometimes it leads, sometimes it gets run by investors. So back in March, it leads 2 weeks. Yeah, about 2 weeks. The spike here, market will add it 2 weeks later. So generally, it's a very good piece of indicator. So what I want to point out here is that we are maybe at a turning point. So take your own risk. I suggest hedging, not financial advice though. So, and I also want to talk about TGA. Okay, so people are using the net liquidity indicator from the Federal Reserve balance sheet. Basically, they just get the number of the total asset of Federal Reserve balance sheet, and then they minus TGA and minus reverse repo. Why they minus reverse repo and TGA is because these two elements actually are, if these two elements rise in amount, and then they will pose detrimental effect on the market. And if they minus these two elements from the total asset, and then they get a positive correlation factor from the balance sheet, and then it tracks the performance of risky assets, has been tracking very well. And I also did a modification on the liquidity indicator, and which I included the calculation of new debts issued by the Treasuries of the United States. And then recently we are seeing that a spike in TGA, and that actually doesn't mean a good thing to the market, because back in May we also see a spike here. Okay, a build up in TGA, which means that money is getting into the TGA account. That's bad for the market, and prices drop. Bitcoin's price, Ethereum's price, Nasdaq's price all drop. And back in Jan 2022, the TGA built up, and also prices plummeted, right? And then when TGA spends down, money eject. I was about to say some stupid word. Money is circulated back into the money is circulated back into the economy. So when TGA spends down, that's good for risky assets. You see there, yeah. TGA spends down, and then prices go up, and then the recent spike in TGA, I think that's not good for markets, but somehow analysts on some economy analysts point out that the recent spike in TGA is due to the Treasury issuing more debts, short-term bills. So they are actually pointing out that those short-term bills buyers are not the buyers who are they actually are not the same buyers of long-term bonds, and that means that reverse repo is not affected. If I'm wrong, please comment down below. I'm very happy to discuss and also explore. So what they mean that the spike in TGA this time will not impose a big significance in the calculation of the net liquidity. So, but I'm still very suspicious, because the green line, as we see, the green line has made a U-turn, and that's actually a bad thing for the markets. So if we look at maybe in September, the green line also kept track with other risk assets, and has been a very good piece of reference. And except in this in November 2022, Bitcoin's price plummeted because of the FTX incident. Okay, but Nasdaq's price keep tracks very well. But this time we spot a very big divergence here. Yeah, I assume I want to zoom in. You see, wait a minute. Yeah, here. Okay, you see the divergence. Bitcoin's price go up, and then the real net liquidity goes down, and Nasdaq's price still very strong. Is that a dead cat bounce, or maybe a fake out? Let's see. I'm highly suspicious of it. I think prices have to retrace back down. This is my personal opinion, no financial advice though. Yeah, no financial advice though. Another indicator I want to share with you guys is the SSR. Wait a minute. Yeah, I'm afraid here. Yeah. Wait a minute. Yeah, the SSR. Okay. This SSR is the stablecoin supply ratio, and it measures the total market cap of stablecoin relative to Bitcoin's market cap. And it also indicates the purchasing power available in crypto's market. So when the green area shows up, it means that we have a lot of purchasing power in stablecoin, and we're gonna pump Bitcoin's price easily. You see that multiple times testified, very legit. First time here back in 2019 January, grade 9 here, and then Bitcoin's price pump. And then second time, 2020 March, I think it's March, right? A lot of huge amount of stablecoin purchasing power, and that actually indicates a bottom. Okay, the third time here, fourth time here, but the timing is a little bit messed up here. January it indicates a bottom area. Oh, so I don't count this one. Fourth time, perfect here, bounce up. Okay, the fifth time here also bounce up. So for the red line, it means the stablecoin supply has come to a threshold, which means that we don't have a big purchasing power to keep Bitcoin's price pushing and other cryptos prices pushing. So it means probably going to retrace 3 times. Okay, 2 times in a row. 1, 2, and then we're here 3 times. So let's see how market reacts to this one. Okay.
And I think how we can see from this chart is that the red lines are sort of signals to actually tell you that it's time to actually it's not financial advice, but it's time to stop. But it's a matter of how long is it gonna you're gonna short for, or how long you're gonna start shorting, right? I think this is one indicator how you can interpret this. Likewise for the green ones as well. It's like it shows the signal to buy, right?
Yeah.
And then it doesn't tell you like when is it a good time for you to sell. So there's a timing issue, but no, it's up to your discretion.
Yeah, timing issue. So I think in terms of trading and investing, this indicator can be used as a very good piece of trend confirmation, but not for timing suggestion, right?
Yeah, that's right.
With regards to timing, you still have to find a good risk to reward ratio. You do some TA, technical analysis, and find some good support area to do your long and short.
Right.
That's the important thing, right? So yeah, these 3 indicators actually all point out that markets are gonna retrace a little bit. Okay. So that's what I think about that. Yeah. Any comments, Benz? What do you think about that?
I think likewise, like from the macro environment, my short term view is still short term as in like maybe 1 to 2 weeks, up to a month at most. I think it's still in a way kind of it's still like a bull market, right?
Yeah. Still strength. We can still see strength in the market.
There's still strength in the market, but if we look at some long term, I would say data or long term, like okay, just take the US yield curve for example, it's a very good indicator already. So it only started inverted like maybe 6 months or slightly more than 6 months ago. So usually we always say like maybe it takes 9 to 12 months for the US to go into recession, right? It's not a hard rule. It's just a guideline. So I think there's still a chance for US to actually deteriorate further because no companies could actually withstand a high interest rate environment. Imagine you are I would say you're a medium-sized company trying to get loans. The interest rate you are going to pay is not 5%, not the current 5%. It's definitely more. It can be 10%, can be even more, 50%, right? No company in the mid-sized company can actually sustain that kind of operations requirements. Even if you look at recent news like Google, Amazon, Apple, they're laying off workers, but I feel that the job data is a bit lacking, maybe 1 to 2 months. It may not be because I think workers that are laid off, they still got the severance as well, right? So they can be 1 year, can be half a year. Wait for that period to be over. You'll see unemployment rate to actually go up. So I think from that point of view, I think the US economy will still continue to deteriorate in this high interest rate environment unless market tension comes in. There's a full blown market correction, maybe SPX or Nasdaq goes down, maybe another 20%, the Fed might try
Mm-hmm.
to cut interest rate. It's like what happened in I think 2018, where the interest rate was at around I think 3.4%, and market tension kicks in, because price the stock market risk assets start to drop, and then they start to cut interest rate. So something might happen, something similar might happen, but it may not happen. But I think from that point of view, I'm still a little bit bearish. This is not financial advice, but from my professional opinion, I'm still a little bit bearish unless inflation can really dies down, and like what the Fed want to achieve, a soft landing.
Yeah, exactly. Yeah. And what about, the recent pump in the AI sector? And let's talk about some cool market trends. Everybody making money.
I think right now, there's I think three trends in the whole crypto scene, which is the first one is the AI. I think everything started from the Microsoft trying to acquire ChatGPT, right? So
Yeah.
I think it started with that, and then I think Binance also came in support with to trying to support like AI, VR, AR technology. So I think these are the two indicator of like the AI sector is flourishing right now, or the pump, what you call
Yeah.
it.
Yeah. The
Yeah.
pump.
So
Just
yeah,
like GLT, you have ever looked into GLT?
yeah, this is the graph, right?
Yeah, the graph.
Is it?
Yeah,
This is the
pump's crazy,
graph.
man.
The graph is, I think it's more like an infrastructure token. So the graph is, I would say, it's an indexing token. In a way, it can be a form of storage slash Oracle kind of database, right? So
Yeah,
what they do is they store data, they actually index data. It's like what we see on like one web tool. It's like a CoinGecko or CoinMarketCap, where all the data are there. They displayed out for what you want to search for, right? This is like the database. So the graph sort of works, something like that. Yeah, this is the reason why recently a lot of like AI slash big data projects
yeah,
are pumping. So
yeah.
I think, I think a lot of I would say infrastructure AI data has been
Mm-hmm.
doing very well. For example, the graph like I mentioned earlier, Ocean protocol is another one, which is like a big data slash storage kind of project. So while we are talking on AI, so Huobi just listed FET batch.ai an hour ago. So
Yeah, yeah,
I think 30 minutes ago.
yeah. What about with
So
share screen? Yeah, go live. Let's look at the
sure.
chart, man.
Okay, just a moment.
Yeah.
Okay. Can you see it? Okay, this batch. So, oh, sorry, not this one. So, batch. Hold on. Let me go to 4B
Yeah.
exchange. FET. Okay, so FET started. Can you see? Okay. Started
How's it
trading
trading?
at 9 p.m. earlier today,
Yeah,
right?
yeah,
And I think it's still doing okay. There's no major pump from this listing. It's still going to according to this market price. So why I think Huobi is moving towards trying to catch the what projects our consumers, our traders are trading to build and deploy AI systems on the blockchain. So it's a token for AI. So I would say it's one of the leading AI projects right now. If you go to CoinMarketCap under AI and big data, right?
yeah.
If you look at market cap, AI is Fetch is the like a top four uh project currently on in the whole crypto. So if we go back to ChatGPT and Microsoft, I would say that ChatGPT is more like a Web3, no, no, it's more like a Web 2 kind of AI project, right? So, however, if you want to look at Web3/AI kind of project, you can look at Fetch AI, or you can look at Singularity.net. Yeah, these are the two tokens we are looking at right now. And
Yeah,
as for Huobi wise, today we just created this AI tab for users to trade AI project. So there's a Phoenix, PTXC, uh, or I think it's I and Z. So these are the few tokens that we have. And I mentioned earlier this Ocean protocol. So we try to enable our traders to actually to trade more with us, and help them filter out what different sectors are there within the whole crypto space. And I think in the next maybe 1 to 2 weeks there may be um more projects coming out. So keep a lookout on our announcement page if you want to trade more with us. Yeah. And
yeah,
moving on, apart from AI projects, I think the second one will be Arbitrum. Arbitrum tokens has been pumping recently as well, right?
yeah, exactly.
Yeah. So if we look at hmm, uh, the Arbitrum, the whole ecosystem, right? Um, you can just note all this. So you look at like GMX is the leading protocol on contract perp contract protocol on Arbitrum,
Yeah,
Magic as well. All these are actually pumping a lot. You see, Magic for 7 days has pumped almost 42%, right? And just like I mentioned about AI or ARVR, also pumped 40%. So all these are the current hype in the whole crypto scene right now.
yeah,
And secondly, I think the third one will be Shiba Inu. So Shiba Inu, they are coming out with their, I think, testnet, layer 2 testnet soon. So there are four tokens that we are looking at, which is associated with the whole ecosystem, which is Shiba, of course. Then there's Leash, Bone, and Tweet. So Bone is like the token for their Shiba swap. So it's used to incentivize these liquidity providers with Bone as like a price, or you know. So yeah, this is what I have for the current hype. Yeah, moving on to the next one. Yeah. Johnny, you're on mute.
I'm sorry. I just want to say that we already listed Cordell. Why not let's look at it? Look at the chart of Cordell. Can you share? Maybe we can go
Oh,
to the Cordell chart. Yeah.
okay, called
Yeah. Actually, people are
hmm,
asking whether how Cordell is doing right now. Let's see.
okay.
Yeah.
Uh,
Probably you can go to Huobi exchange and then let's
yeah.
have a look, man.
So Corda is listed around an hour and 45 minutes ago.
Yeah, yeah,
I
yeah,
think,
yeah, yeah. Very good, man.
yeah. So I think the initial price was around $1, and it pumped all the way to, I think, all the way to 40. And then there's a correction right now. I think it's in the price discovery phase at around $5.10. I think there's a
Yeah,
lot of other exchanges listed at the same time, like okay, for example. And I think back to call down. I think we have mentioned many times like call down is something new. Where I think users of the chain can actually mine and stake call token, and using the new consensus, which is Satoshi Plus, which
yeah.
combines
Satoshi
Bitcoin.
Plus.
Yeah,
last time we talked about that. That's a very cool feature.
Yeah.
Trying to leverage Bitcoin's proof of work.
Yeah, it's something like it's something new in the space. It's a combination of proof of work and proof of stake together, and it doesn't help the secure system. And however, this is still something very new, where users can use everything from their phone to actually do all this stuff and actually get rewarded with core tokens. Right?
Yeah, haven't really seen this kind of projects coming out before. This is a new thing, actually.
Yeah. So right now, we are at this price discovery phase of $5, right?
$5. Okay, yeah.
Yeah, $5, and I think it might go on for a while. Because
absolutely,
personally, I don't hold core token, but I feel that their technology is still very innovative, and there's still, I think, room for more participants to try this new technology.
Yeah, right? Absolutely. Yeah, and I don't think we just have 15 minutes time left. I forgot that I'm gonna share the bi-weekly market report with you guys. Okay, let me get to that page. You see,
what is this bi-weekly thing?
It's actually a market report on Bitcoin, and I pull data from Glassnode and also combine some macro data, and then I think the frequency of releasing this report in 2 weeks time frame is okay, because on-chain data they take time to develop, right? If I update it weekly, and then I think that will be a little bit redundant. Okay, so. Yep. Yeah, let's just go through table contents. Actually, I'm just gonna look at some models here. Some price models. Yeah, long-term holder, short-term holder cost basis. So we can see who are sitting in profits. So right now, I think both long-term holders and short-term holders are sitting in profits. That's good. And also, see the green, the black line, black dotted line indicates the 200 weeks moving average. The first time we spend our time, the first time Bitcoin dips below the 200 weeks moving average, and we're about to come to retest it, there'll be an important level to watch. And also, yeah, also we have a lot of cool features here. For example, we have the Bitcoin cycles comparison. That's actually a pretty good one. Yeah, and also we have some definition of metrics in terms of if you are new to these indicators. For example, if you're new to what realized prices, and also if you're new to CVDD, short-term holders, long-term, we'll have the explanation here. Also some profit and loss overview and indicating people in the market just with a little bit of profits, because the cost base is just reached an equilibrium where short-term holders and long-term holders are just meeting their average cost basis. So not yet in great profits, but still sitting in profits. And then the SSR ratio I already mentioned. I'll update it 2 weeks, okay, in 2 weeks time frame. And also we have the exchange withdrawal behavior analysis. Like if we see a lot of Bitcoins coming into exchanges, we expect them to sell, right? And then if we see a lot of Bitcoins moving out of the market, and then we assume that it's an accumulation phase, right? For example, in November, December, absolutely a huge amount of withdrawal of Bitcoin from exchanges and all sorts of withdrawals, right? From retails to institutions, a lot of big traders and small traders, they all withdraw a lot of Bitcoins from the market. Whether it's, I think they are exercising self-custody, and also it's actually also a feature of accumulation at discounted prices. Some smart money accumulate here. And then yeah, liquidation update, that'd be cool. And also the CVD update. I talked about it in last week's episode, I think. So I also have DXY. I'm gonna update it next week, so pay attention to huobiresearch.com, because you're gonna see it next week. And also we're featuring 2 important indicators. So the inverted reverse repo indicator and also the real net liquidity model. These 2 indicators are actually very helpful for assessing the current market strength. Used for confirmation, trend confirmation. You gotta look into that. I also have the news offers. For example, you talked about Shiba Inu, the layer 2 network data beta. Actually, we released this report 1 month ago, so that would be a good piece of alpha. And there are also other alphas there. Yeah. And also provide an update on HT price, and also to address, we're seeing a lot of people are actually becoming HT holders. And also we have the HT DAO. Check out their Twitter, and let's see what they actually have some cool rewards for DAO members. And make sure you stay tuned to the Twitter to the Twitter. They also have regular Twitter space as well. So some marketing message like Prime Fold and Prime Pool, this report. Yeah, it looks like just a very comprehensive market report for you to analyze. The main purpose of this report is to confirm the strength and also the weakness of the current trend. So if overall, in last week, actually, let's look at the summary, man. Here, okay. Actually, last week's summary was, we are in absolute bullish trend, and a lot of strength, signs of strength are seen in the market. For example, the recent pump above the CVDD floor price, great rebounds, and then also reclaimed the realized price, and also price climbed up above long-term and short-term holding cost basis. These are signs of strength, okay? And also, also in the anticipation of the Shanghai upgrade in March 2023, some liquid staking derivatives and also Ethereum also pumped a lot. And these are some insights in. And then, and also we pointed out that the recent price pump was mainly driven by, the aggressive buyers in Binance and that's and other insights. And then I think the juicy part lies in the macro liquidity, the inverted RP, and also the real net liquidity indicator. These two are the gems. So I pointed out there are actually 3 bearish factors. The first one is SSR, stablecoin support ratio. I mentioned it previously. The other one is the real net liquidity indicator has made a U-turn. And then the third one is we are about to test 200 weeks moving average for Bitcoin, and then could be a possible resistance area to watch out. But the lucky thing is that the reverse repo is still, is still strong. The reverse repo, we are not seeing a lot of money moving into reverse repo, and then that's actually indicating a good risk sentiment in the market. Yeah, that's we are publishing on Huobi research page, so make sure you stay tuned to our Twitter and also our official website. Yeah, that's all from my side.
Yeah, so just to summarize it, according to last week's report, right? You're mentioning about indicators really show that there's some short-term strength in Bitcoin and also in the general market, right? Yeah, man. So I think it comes to our both of our consensus that for the past 1 to 2 weeks, or maybe for the next 1 week, the prices would the prices will still be good. The sentiment will still be good. So
I guess so. Sentiment will be good. But there's also a possibility that we might see a pullback. But let's assume the pullback. Let's see if it's aggressive or not, and then we will then evaluate the trend strength again.
Okay.
Yep. All right. Yeah, that's all from our side. And let's see if you want to update audience with anything.
Oh yeah. I think we still have to cover one more, right? Last one is Blur.
Oh yeah, man. Oh yeah. Blur. Yeah. That one's actually a NFT marketplace. let me show you the news here. Wait a minute. Okay, wait a minute. Here. So actually, we are going to list Blur on February 14th of Valentine's Day, man. And then it's now it's actually a NFT marketplace. So let me just click on the website. interesting because they have a low gas fee feature, and then it's actually 10x faster than Gen. Yeah, lower gas fee, and then make sure you check out what's it about. But I'm not a big fan of NFT, so I'm not going deep into this protocol. But
I think
for
I
yeah,
think I think right now is that I think there's a small hype going on in the NFT space.
oh really?
We, yeah, I think on chain wise, we are seeing more activity pick up in terms of buying and selling of transactions for NFTs and more interest in
Oh,
NFTs as well. So
oh
for NFT marketplace to actually release Blur, I think it's something
yeah,
good because
yeah.
if you look at OpenSea, you can look, I
Mm-hmm.
think looks not looks rare. I mean OpenSea, for example, you're paying gas fee in Ethereum, right?
Mm-hmm.
So I'm not sure how because I have not read about Blur, the utility of the token. Blur could be used as a form of gas fee, for transactions. This I'm not very sure myself. It could be. Transaction fee might be cheaper, right? So I
Yeah, I
think
also
it's something
tried
good.
to look into their white paper, but I don't find it on their official website. So probably if yeah, but I'm gonna look into that later on. If I found the white paper, I'm gonna share with you guys next week. Probably we don't have time this week.
Yep. All right. I think that's all for now. So deposits for Blur has not been out yet, so take note
Yeah,
for the
yeah, take note.
announcement.
Mm-hmm.
Official trading date will be on Valentine's Day, so also
Mm-hmm.
take note of the date. And I think that's all for today
Yeah, yeah.
for us.
And that's
Yep.
all for today. Yeah,
Yep.
and
Okay.
thank you, Ben. Thank you guys for listening. And yeah,
Yeah.
see you next week.